Welcome back. We're not wasting any time today. A lot of important information and data has come out about Bitcoin in the market, so let's get right into it. I want to start off with the FOMC meeting that happened a few days ago. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.50%. With tariffs being around and causing a bit of inflation in the short term, I knew that the Fed wasn't going to lower interest rates because that would just spike inflation and will pretty much stop all the progress that we made over the past 2 to 3 years as far as the economy and getting the inflation rate back down. So this is not really a surprise to me. And in a moment, after I show you another quick piece of data, I also want to show you the probabilities of where we could be in the next couple months when it comes to the FOMC meetings and how interest rates may or may not be able to come down. Beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at $35 billion. So in simpler terms, all this really means is that the Fed has reduced the rate at which they remove liquidity from the economy and from the financial system. Versus when we look at QE, we tend to see the Fed buy back a lot of these securities and hold them on their balance sheet, injecting liquidity into the market to increase spending and increase global trade, while also, of course, lowering interest rates. So no, QT isn't over, but this is probably one of the reasons why we've seen a spike in the Bitcoin price over the past week or two from the lows of when we hit the CME gap. So this is also why you see Bitcoin hovering around 87,000 to around 88,000 over the past 24 to 48 hours or so. But until I see interest rates come down significantly, I'm talking in the 3.25% range to 3% range, or even the 3.50% range, and we start to see the Fed buy back a lot of these securities, there's no reason for me to think that Bitcoin and unfortunately the altcoins will have any significant spikes in the short term. But there is a light at the end of the tunnel, and it may be coming sooner than we expected, but we'll get into the probability charts and we'll talk about that right now. So this is the Fed funds futures, and this pretty much details when we could expect to see interest rates increase at particular dates. And this is pretty much the FOMC meetings that we have lined up throughout this year and a bit of next year, or actually all of next year as well too. So starting off here on the first line, we can see that the first FOMC meeting is here at May 7, 2025. And remember, we're sitting at that 4.25% to 4.50% range at the moment. And as you can see, we still have an 88% chance that we end up staying at this interest rate currently. Now, the reason why this might change is because we also have inflation data coming out in early April. I believe it's either April 1st or April 4th. Don't quote me on that date, but I believe it's one of those two dates where we have the inflation numbers coming out. And if we get a decrease in inflation, it could change the probability of this interest rates. But at the moment, seeing an 88% probability usually signifies that we probably won't see a change in direction of inflation to any drastic measures. So we'll probably end up seeing the interest rate stay the same in May. But the bright spot I want to bring you to is that in June on the 18th, the FOMC meeting after the next one, we start to see the probabilities actually shift in the favor of a 25 basis point rate cut, which is obviously good for equities and good for Bitcoin and good for altcoins as well. Very good for altcoins, actually. Contrary to what we saw in 2021, where we saw a big lull in the summertime, it's pretty probable that we'll see a lull, I believe, in April, May, and June. And I know I said that we would see a big spike in increase in assets come mid-April to late May. But as we get new data into the market, we have to adjust our outlooks on the market so that we can make the proper decisions to prepare for our financial futures, of course. But that doesn't mean that we can't see a breather in altcoins and Bitcoin over the next couple months or so, because global M2 is ramping up, and that's just global liquidity in general. So that means China, Japan, the EU, the United States are starting to slowly pump more money into liquidity, or at least in America's case, reducing the rate. And we're also starting to see interest rates fall in Canada as well, where I reside. This is also another reason why you could see equities and Bitcoin pick up in the near to medium term. And we're also going to talk about this. I'm going to show you a few different things I saw on the chart to kind of give you an update about where we're at and where we could be heading within the next couple weeks to month or so. So stick around for that. But to go back to the chart now, you can see that as we reach into June and the July meeting, the probability that we start to get an interest rate cut gets a lot higher. As we get later into the year, the chances of a basis cut into the 3.57 range to around the 4% range actually gets a lot higher comparative to the 4% range. I think by sometime in either May or June, one of these FOMC meetings will definitely get a rate cut, and it'll obviously increase the probabilities of getting another rate cut further down to the 3.75 rate. As we see that data come out, of course. Taking a quick look at the Bitcoin chart here, I kind of revised this trend line that we had recently before, but we more so broke this trend line. You can see this very rough trend line here and actually broke down. So I kind of created a new trend line to see if we were still in an uptrend, and major support hasn't really been broken yet down here at 70,000. So still nothing really to worry about. Now we can see here up at the point of control sitting around just under $96,000, and we need to see Bitcoin break this price level, right? This volume node here, to see a massive increase in altcoins specifically. So we're also actually seeing a lot of correlation between these volume nodes here, actually right smack dab in the middle, and the Binance liquidation heat map that tracks USDT and the BTC pair. So I'm going to show you that in 1 second. But before we move off of this chart, and we might actually come back to it in a second, we're also seeing on the RSI that we've recovered back above neutral. So we're kind of in the middle right here. And I wouldn't necessarily want to take a trade out at the moment because we're kind of in the neutral zone. And for me to more confidently take a trade, Bitcoin's currently trading at 87.8 right now. 87.7. So I probably actually want us to see us come down and test this $85,000 level first. Actually, more preferably, maybe even a wick down to 82.2. And I'm going to actually show you where the liquidation heat map is stacking up right now to where you could possibly be taking a trade as well. So let's actually go over to the chart so I can show you what I'm talking about. So looking at the liquidation heat map, and this, mind you, this is the Binance BTC USDT pair liquidation heat map. And the reason why we look at it quickly, let me explain for you, is because Binance, last time I checked, owned about 70% of the digital assets, period. They're the largest exchange in the world. That number may have changed over the past couple months, but point is that they definitely have a lot of influence and dictate where the market goes on a lot of these assets that we like to trade. And these yellow markers here, as you can see, are where a lot of liquidation points at. And that pretty much means that a lot of money is bet at these price points for either longs or shorts in the markets. And as you can see here around at 86.6, there's a massive liquidation point. We have another one that's trading that's probably going to hit today, which is at 87.4. We have another one up at above 89.2. And we also have these slightly lower liquidation points down here at around 85.6, 85.4 per se. And you can see down here as well. Binance loves to take out long and shorts on both sides. So this is why you usually see price range in between these massive liquidation levels. So if you were looking to take a long, there's no doubt in my mind you should absolutely be waiting for this 86.6 point to get taken out. And I'd say before you would see you could see a nice bounce off this level, but to see an even nicer long here, you probably want to wait till that 85.6 point. And I probably just put a limit order in. You don't really want to be spot buying, and I probably use only like 5x leverage so that your liquidation points are below all of these ranges because you don't want to get wiped out. And the same thing is true if you want to take a short. Even around 90.2 would actually be a good level as well to put in a limit order for a short as well. So, and we'll just hop back over to the volume profile and the BTC chart real quick so I can show you the confluence that I've seen in the charts. So as you can see here, the point of control is actually sitting around 84,000, and the top of that volume node is actually at 84.3. So this lines up pretty close to where a lot of liquidation possibilities are at on the liquidation heat map. So I think honestly you probably want to wait and put a limit order in around maybe 84,000, and that is honestly for a massive wick to come down and just being safe more so than anything. Now there's a few more key details that we need to check out that we're going to get into right now as well. So we also want to check on the fear and greed index. We're sitting at 46, which is pretty neutral. Like we saw in the RSI is around 50 at the moment, so sentiment is pretty neutral in the market. It's not really a great time to trade because there's no clear definition of whether we're oversold or undersold. So understanding that, like I said, you want to wait for some major price action before putting in any trades. And we also look at last week around 34, and last month was actually neutral as well. So sentiment is picking back up again. Like I said, we're not going to see sentiment peak into extreme greed at any time or any point. We need interest rates to come down ultimately. Another key metric point to look at is the DXY. This is the US dollar index. And obviously we know that the strength of the US dollar means the lack of performance for equities. The weakening of the dollar means good things for equities and crypto, of course. So as we can see here, when 2025 rolled around, we peaked at above 109, almost at 110 on the DXY. And we're still seeing a slight decline in the dollar index. So we're sitting around 104 at the moment. I'd like to see this trend continue in the next couple of months. This is trailing 6 months, by the way. So within the next 6 months, I'd like to see this also come down as well, and that'll obviously be a good thing for all of our bags. So the actual print for March is coming out April 1st is when we're going to see the print for the ISM. And we actually saw that it actually came down in the month of February, right? It came down to 50.3 in February from 50.9 in January, where we actually started to see some progress in the business cycle. So looking at the ISM here, it actually forecasts that we actually go down another 3 points as well. And I think that the reason why they're forecasting this is because of tariffs. Now, tariffs usually get put on the consumer because when you see tariffs go up, a lot of the businesses just price the cost of tariffs into the pricing of their particular asset or their goods and services. And you see the consumer have to front a lot of that cost in the short term. And this could potentially force a lot of consumers to dial back their spending on unnecessary goods as much as they can, especially when it pertains to tariffs. So this is also why you start to see a lot of global trade also slow down in the short term because of tariffs. And this is why you also see the ISM forecasting actual dip from where we are actually seeing progress at the beginning of the year in January to where now we're almost a full point down. But like I said, I'll update you in early April about the inflation data and the ISM when the time comes. This is looking to be a very turbulent time over the next couple months. Like I said, the one bright spot is that probability chart that I showed you earlier, that we might get a rate cut in June. But up until that point, like the data shows, I don't think we'll see a rate cut in May unless we see something drastic happen with inflation. And before you click off the video, please leave a like for me. It really helps the channel grow. Also, share the channel out to more of your friends and family so they can also get this much needed information to stay up to date on the markets. We make these videos every week or two to make sure that we can stay on track and we have a clear mind about where we're headed in the market. And subscribe to the channel. We're almost at that 1,000 subscriber mark. I remember thanking you guys at around 100 and around 500. So I want to say I love you guys and thank you so much. We're almost at that 1,000 mark. It's going to be an amazing accomplishment for all of us in this community. It just really shows the support and it warms my heart. And this is what keeps me motivated to continue making content on this platform. And click this video up here to just copy my altcoin portfolio so you can see success within this market, and click this video up here to see some of the altcoins that are on my radar as of recent that you could possibly add to your portfolio as well. Thank you for watching, and I'll see you in the next one.